Good evening and namaskar. Today we will take a look at the premier hotel company, Indian Hotels Company Limited. It is primarily engaged in the business of constructing, owning, operating, and managing hotels, resorts, and palaces. The management consists of Mr. N. Chandrasekharan, who is the chairman, Mr. Puneet Agarwal, Chatwal. Puneet Chatwal is the managing director and chief executive officer. Actually, Chandrasekharan is the chairman of the entire Tata Group also and of Indian hotels in particular. So the company has about 180 hotels with a total inventory of more than 21,000 rooms. It is constantly expanding and expanding and expanding. It also has a pipeline of 62 hotels with an inventory of 8,000 rooms. Its hotels are spread across 12 countries and 100 plus cities. It is the largest hotel player in India, ahead of Marriott, Radisson, ITC, and other large hotel corporations. So the Indian Hotels Company, operates hotels under four main brands, catering to different segments: luxury like Taj, upscale and upper upscale, Vivanta, select patients, and mid-scale and lean luxury, Ginger. They have named it as Ginger. Ginger has nothing to do with the hotel. Brand value. The company was rated the strongest hotel brand in the world by Brand Finance, the world's leading brand valuation consultancy company, in its annual Hotels 50, that is Top Hotels 50 in 2021. The report recognizes the most valuable and the strongest hotel brands across the world. So there also Indian Hotels is standing at the top. Out of the total hotels managed, 18% are owned directly by the company, 36% are owned by group companies. That is why Chandrasekharan is in the picture. And the rest of 46 are under management contracts. The share of management contract inventory has increased from 25% to 46% in the last 4 to 5 years, primarily due to focus on growth from asset light model since the last few years. Now it doesn't want to construct everything by itself. It wants assets to be light. Now, the room rentals, food and beverage and banquets account for 87% of the revenue, followed by management and operating fees 80%, membership fees 4%, and shop rentals 1%. Overseas operations, that is export revenues, account for about 19% of the revenues. Earlier it was hardly 9%, now it is 19%, it is growing. Qmin, it's a government, that is food delivery platform offering cuisines, multi-feast menus and others through platforms like Qmin Shop, Qmin Truck and Qmin Cafe. It is present in 20 plus cities. AMA features 80 plus properties such as private bungalows and villas that offers a nice experience to travelers who want the comfort of privacy at niche destinations. It's available at a few places like villas type. Taj Sats, a joint venture between Taj and the Sats Limited, a market leader in airline catering with 34% of the market share. The company obviously is a part of the Tata Group, wherein the group holds 38% stake in the company. The group has shown financial support to IHCL, Indian Hotels Company Limited, over the years by subscribing to various equity raising activities of the company. In FY22, the company raised equity of more than 4,000, out of which more than 2,000 was raised via rights issue, and the rest was in the form of QIP, the primary in crores. The primary reason for equity raise was to reduce the debt. Current market cap is around 55,822 crores. Current price is around 393. 52-week high is 399. So it is very close to 52-week high. And 52-week low is 207. Stock price earning is 58.3. Book value 56.2. Dividend yield 0.26. ROC 13.3%. ROE 12.7%. Face value 1 rupee. 1 rupee. On that, current price is 393. Now, if you look at the price graph, it's moving up gradually, like this. It's not moving up like this, it is moving up like this. The company has given a good quarter, has delivered good profit growth of 58.5% CAGR over the last 5 years. Debtor days have improved from 36.5 to 28 days, but the stock is trading at 6.96 times of the book value, which is a negative point. Poor sales growth of 7.2% in the last 5 years, a low return on equity over the last 3 years. Now let us look at the last 5 quarters results comparative. Sales have grown from 4,512 crores to 4,463 crores, 1,575. That is because of that COVID. And then 3,056, it has now come back in March quarter, 5,810 crores. Operating profit is also showing the same thing, 830 crores to 1,805 crores. Operating profit margin has grown from 18% to 31%. Net profit has grown from 296 to 1,053 crores. 296 crores to 1,053 crores. EPS 2.17 to 7.06. Dividend payout is not growing. It has actually come down from 21% to 14%. We will see the same thing once again from a different light. Total income has grown from 872 to 1,625. Year-on-year growth is 86%, but quarter-on-quarter there is a slight fall of minus 4%. Net profit has grown from 302. No, actually 302 is the latest. Previous quarter 379. So there is a quarter-on-quarter fall of 20%. Whereas annual, it has grown from 79 crores to 302 crores. That is 279%. Growth is there in net profit. Now, EPS also shows the same things from 0.56 to 2.31. It has grown on 1 rupee face value. So 313% growth year on year, but quarter on quarter there is a degrowth of minus 14%. Sales growth gradually it is growing. Profit growth also is trailing 12 months is very excellent, 428%. Stock price growth is 79% in 1 year. Return on equity last year 13%. Borrowings have grown from, it is approximately 3,100 to 3,300. So borrowings are the same. It is actually expanding on different models, asset-like models. Debtor days have fallen from 30 to 28, inventory days 143 to 84, days payable 550 to 368, all impressive. Cash conversion cycle minus 376 to minus 256. Working capital days minus 88 to minus 51. ROCE has grown to 13% from 1%. Shareholding, if you see that, promoter group is at 38.19%. FII's group is 19% to 18.24% decline. DII's has improved from 26.55 to 27.47. Government 0.13, public 15.97. The enterprise revenue, totally, see, what are the key milestones? Let us see. Enterprise revenue is 11,000 crores, which has gone up by 1.5x. Consolidated profit after tax, 1,000 crores, gone up by 2.8x. Free cash flows, 1,000 crores, 3.5x. Market capitalization, 50,000 crores, has gone up by 2.5x. Now, it is a strong Indian consumption story, which is people are willing to spend money on 5-star hotels, like Indian hotels. Hospitality demand is growing and supply also is growing. Not like for like growth, it is growing very well. Asset light growth. It wants to take ready-made villas, etc., ready-made palaces, and convert them into hotels. And it wants to focus on share of high margin business, enhanced productivity, zero interest cost, simplification, focus on ROCE growth, strong free cash flows, robust cash reserves. So, Indian hotels is a growth story. There are cyclical growth and fall in any hotel business. We have seen in COVID times it has fallen very heavily. Subsequently, it has grown again. It is focusing on growth in a very focused manner. It is focusing on growth with profit, asset light model. Therefore, Indian hotels company is any investors delight, but it is for a long-term customer. It will be growing. So, Indian hotels is and it is a Tata Group company. Chandrasekhan is at the helm as chairman. So, overall, the picture of Indian Hotels Limited is very good. So, those who are willing for long-term growth can look at Indian hotels, read this 2-3 times, listen to this, and subscribe to this channel. Make your friends also to subscribe to this channel. I will be giving you very good companies only, generally. Very rarely I will select a falling company. That may be because of demand from you people. But generally I pick up very good companies. Thank you for listening to Indian Hotels. I will be back with you with another very good company. Thank you.